All right, today we're going to unpack how one of the world's biggest companies, Reliance Industries, is basically re-engineering its entire empire. And look, this isn't just some dry quarterly earnings report. No, this is the actual financial blueprint for a massive pivot, a shift towards the consumer and green energy. The crucial thing to understand is how this shift is already starting to pay off. So, okay, let's dive right in. And this quote from the CFO, V. Srikanth, it really nails the theme for us: resilience through diversification. I mean, think about it. In a pretty shaky global economy, it's the company's newer ventures that are becoming the bedrock. So it's not just about weathering the storm, you know? It's much more about building an entirely new, much stronger foundation for all that future growth. And get this, the global market is giving this whole strategy a massive vote of confidence. S&P Global Ratings just gave Reliance a 2-notch credit upgrade, all the way to A-. Now, this is a huge deal. An A- rating, that signals exceptional creditworthiness. It actually makes Reliance the first Indian manufacturer to ever hit this milestone. So what does that really mean for them? Well, it unlocks cheaper global capital, which gives them a ton more firepower for their ambitious plans. So the big question is, what's driving all this confidence? Well, to answer that, you gotta look at the consolidated numbers, right? This is the hard data, the proof in the pudding, that paints the picture of a company that's really navigating a major transformation and doing it successfully. Now, what's really interesting here is the story behind the numbers. Okay, we've got solid 10% revenue growth and a healthy 6% jump in operating profit. That's EBITDA. Now, that 1.6% net profit growth, it might look a little modest, right? But here's the key. It's being held back by massive, and I mean planned, depreciation costs from their gigantic 5G network rollout. So if you just look at it from a pure operational standpoint, the business is absolutely firing on all cylinders. And this chart, this just brilliantly illustrates that strategic shift that earned them that A- rating. Look, the legacy oil-to-chemicals business is still a powerful cash generator, no doubt about it. But just look at the growing contribution from digital services and retail. See? These consumer-facing businesses, they provide a much steadier, less cyclical income stream, and that de-risks the entire company. This is the kind of diversification S&P was looking for. So let's move to the first of those pillars and see how it all works. All right, first up, Jio. And let's be clear, it's so much more than just a telecom company now. This thing is the digital engine at the very heart of Reliance's consumer-facing transformation. And frankly, it is performing incredibly well. I mean, the scale here is just, it's mind-boggling. Over 515 million subscribers. They added almost 9 million new customers in just one quarter. This isn't just market leadership, folks. This is flat-out market dominance on a national scale. But here's the really smart part. They aren't just adding more users, they're adding more value. The average revenue per user, or ARP as they call it, is now over $213. And what's crucial is that this isn't because they just raised prices on everyone. Nope. It's organic growth, driven by customers choosing to upgrade to better plans and using more of those data-heavy services on the 5G network. So how in the world are they connecting so many homes so quickly? Well, this technology right here is the key: fixed wireless access. And you should really think of it as a strategic masterstroke. While their competitors are spending all this time and money literally digging up roads to lay fiber optic cables, Jio is just using its 5G towers to beam fiber-like speeds directly into people's homes. This lets them completely leapfrog the competition and expand into smaller cities at a pace that is, well, it's just unmatched. And it all comes together right here. I mean, they've already captured 2/3 of India's entire 5G user base. They're using these advanced 3D digital maps of buildings to deploy that fixed wireless access technology with like surgical precision. And then for businesses, they're offering managed services, which creates stickier, long-term revenue. And finally, you've got partnerships with giants like Google to integrate AI tools like Gemini Pro. And that just keeps adding more and more value, making their whole ecosystem even harder for customers to leave. All right, let's turn to that second consumer giant in the room, Reliance Retail. So, if Jio is busy dominating the digital realm, you could say that retail is on a mission to conquer both the physical and the digital shopping world with its omni-channel strategy. Okay, so at first glance, the revenue growth here looks a little bit muted this quarter. But that's because there's some temporary noise in the data. You know, things like the festive season being split differently than last year and some GST changes. The real story is the underlying strength. Growth in their core grocery and B2B businesses is rock solid, and their big push into quick commerce is scaling up at an absolutely incredible rate. And speaking of quick commerce, this number is a total showstopper. They are already processing over 1.6 million orders per day. So how are they doing it? Well, they're cleverly turning their 3,000-plus stores into mini warehouses. This makes them a major force in the super competitive delivery space. And they say they're contribution margin positive, which in plain English just means that on average, each delivery is already profitable even before you account for fixed overhead costs. And let me tell you, that is a huge milestone. And really, the growth is happening everywhere you look. You've got strong like-for-like growth in their big box grocery stores and a growing B2B business with local shops. In fashion, they're using their huge store network for same-day delivery. Electronics got a nice boost from the festive season, and their new FMCG arm is aggressively acquiring brands and scaling up production. It really is a full-court press across every single retail category. Okay, so we've seen the twin consumer engines that are firing on all cylinders today. Now let's look at Reliance's colossal bet on tomorrow, new energy. This is their massive plan to build a globally competitive end-to-end green energy ecosystem right there in India. So this right here is the key to their whole strategy. See, they aren't just buying parts and slapping together solar panels. No, they are building the entire value chain themselves, from processing the raw polysilicon, which is basically just purified sand, all the way to the final high-tech solar module. This kind of vertical integration is classic Reliance. It's all about controlling costs, securing your supplies, owning the technology, and of course, capturing profit at every single step. And this quote from the project leader, it just says it all. The goal is to build something so big, so integrated, and so technologically advanced, like their 10-gigawatt solar chain, that it creates an unbeatable competitive moat, something nobody else can easily copy. They're basically leveraging decades of experience in pulling off mega projects to build a new energy behemoth from the ground up. So with all these incredible ambitions in digital, retail, and energy, it's a fair question to ask, where is all the money actually going? Because, following the capital, that tells you everything you need to know about a company's real priorities. And this chart, this is the pivot in action right here. Yeah, the legacy oil to chemicals business still gets a big chunk of investment, but just look at where the rest of the capital is flowing. A massive 8,000 crores into new energy, another 7,500 crores into geo, and 4,000 crores into retail. This isn't just talk, folks. This is Reliance putting its immense financial weight decisively behind what it sees as the growth engines of the future. Which leaves us with this one final thought. By building these massive integrated businesses, Reliance isn't just diversifying away from oil and gas. It's engineering a complete identity shift. So the real question is, are we witnessing the creation of a totally new blueprint for a 21st century conglomerate? One that's built not on oil, but on data, consumption, and sustainability? It is for sure a fascinating transformation to watch.